Welcome back everyone to another episode on the stock review. Today we'll be looking at IonQ, ticker name also IonQ. So without further ado, let's get right into it. Over here we can observe the IonQ company itself. The stock of the company has been increasing significantly. One of the surge has been around 700%, and another round is going to be 350%. So this company movement is pretty huge. So you could have earned a lot of profits just by holding and buying it at a low. But whether or not if this company will continue to perform as how it is right now in the near future, we'll be looking at their financial fundamentals. So for the revenue for IonQ, the value for the revenue is significantly great in terms of increasing as well as high predictability, showing the company has great sales for what they are doing. As for the net income of IonQ, it's slightly in the way of opposites compared to revenue, whereby the net income is in the form of negative, and it has been gradually increasing and more negative, which means that they have accumulation in terms of loss. So the company has very low possibility in terms of generating cash as well as profits. So it's just a company whereby they are just burning and have accumulation in terms of their losing net income. So for the free cash flow of IonQ, so as expected from the view of decreasing net income, losing money, company does not generate any profits. So the free cash flow itself will certainly be in the form of negative. So meaning that the company itself will have bad or terrible situation in terms of their cash as well as profit generations. So we'll be looking at what IonQ actually do. So it's actually a company that develops and sell trapped ion quantum computers and quantum computing cloud services for business and researchers. So their revenue streams from quantum computing services via cloud platforms as well as hardware sales. So the revenue streams is around 50/50 for the hardware sales as well as their platform services, which is the quantum computing services via cloud such as AWS, Google Cloud, and so on. Just a short understanding of what they are actually doing, which is quantum computing, is a type of computing that use quantum bits to perform complex calculations that are much faster than the classic computers. So quantum bits compared to like classic bits of 0 and 1, if you study computer science, you will actually understand it. So compared to classic bits, qubits are basic units of information which can exist in 0 and 1, and both simultaneously due to quantum superpositions, and they can perform more complex calculation in a more exponentially faster than classical computations. And moving on to the three strengths and three weaknesses is going to be leading in trapped ion quantum technology with high qubit fidelity, accessible via major cloud providers, giving wide adoption potentials because they include their services in the AWS, Azure, Google Cloud. And finally, it's going to be scalable architecture with long-term growth potential in enterprise. And for the three weaknesses, it's going to be the high R&D costs with limited immediate profitability. So IonQ, the situation right now is they have high costs for their research and development department, and which can be reflected in the terms of net income, which is shown in a negative form and have accumulation of negative or losses. So the second one is going to be the quantum computing market, still nascent, slow adoptions. And third, finally, which is going to be competition from superconducting qubit company like IBM and Rigidity. So we'll be looking through this company as well because I'm actually quite curious about IBM and perhaps from Rigidity, and we'll be seeing it sooner in the latest of the stock review video. Now on IonQ, we'll be looking at their profit margin. Is actually because of the negative net income, so the profit margin is always in negative form, 1.8k%. That is very huge. And in terms of their balance sheets, we have the total current assets of 1200, as in for their total current liabilities is going to be 139. So this is they are having 10 times, almost 10 times the total current assets than their total current liabilities. So this is actually whereby the company situation, if current situation needs to clear up all the liabilities, they will be able to do and also be able to cover up 10 times more their liabilities right now. And as for their net cash, it's also in a positive form whereby they have more cash than their debts. And looking at the ratios, we'll be having the PB ratios at 7.26. So this is actually also quite expensive, but actually it has been retraced down as we saw from the chart. And we also have the debt to equity ratio below 0.5. We also have the ROE and ROIC in the form of negative due to the fact that they have negative incomes and negative net incomes, which will result in this fall. So lastly, we'll be looking at the economic mode score for IonQ. And for the Morningstar, there is no explicit mode on Guru Focus. The summary is that the key statistics such as large losses, high volatility, rapidly growing assets, but they also highlight growing challenges in quantum computing investments. So the final economic mode score suggested by the AI GPT itself, it's actually sitting at 4 to 5, which is a narrow mode, which is quite explainable due to the fact that they are still currently in a position whereby they are not profitable due to high costly R&D research and development, which can be one of the problem whereby the stock price is going up, but the cash generation, the profits are not generating in terms of positive value. However, I do want to give credit to them whereby they have more cash than their debts, which I do think that is part of their supplementals or funds required by them in order to continue proceed with their R&D to increase their products as well as services. So in the sense that this company actually generates great revenue, but then the net income is negative and continuously going negative, having more accumulation losses. Despite all that, they are able to have more cash than debts for their financial status, and also showing that they are actually burning their money, their profits into R&D to provide better services. But the situation whereby the company does not generate any profits, but the stock price of the company keeps going up is actually quite concerning for me, as I'm looking for a very high quality company. They will be continuously generating profits and continuously increasing in terms of their company price and valuation. So in terms of having more cash than debts is great, but then the deal breaker is going to be that negative net income, which leads to accumulation in terms of loss. And as far as quantum computing, there are quite a few competitors in this market, although not directly having that specific niche in terms of computing, quantum computing, but they are significantly performing better than IonQ, such as Microsoft and so on, which I do think there will be better alternatives or better investment out there. And IonQ is just not one of the better options due to the fact that they don't provide profits, predictable profits, while at the same time their stock prices still keep going up and in a very high volume, high volatility situations. So as for my situations, it's actually a very great company, but until they being able to start generating profits consistently, as well as becoming a white mode company, until then, I will just observe this company and then treat it like a potential growth or white mode company in the future. So I guess that is all for the video on IonQ. I hope this helped, and if you are interested more, you can do your further due diligence and research before you invest anything into the market. So I guess that is all for today's video. I hope to see you again. Goodbye.